Hello and welcome to Inside Indiana Business. I'm Gary Dick. Well, late in the week, Eli Lilly and Company unveiled plans to invest some $850 million in U.S. capital projects in 2017. That includes an $85 million investment here in Indianapolis to expand Lilly's Trulicity device assembly operation. It's part of a massive 5-year diabetes manufacturing expansion. And for more on what's fueling this infusion of capital and also if more investment could be on the way as well, pleased to be joined, as always, by Lilly CEO Dave Ricks. And Dave, as always, welcome to the program.
Great to be with you.
Okay, big number, $850 million in U.S. capital projects in 2017. What's fueling that investment?
Well, we've talked for a little while now about our return to growth based on new product innovation. Lilly hopes to launch 20 products between 2014 and 2023. Those products are taking off. Some of those early hits include Trulicity, which is we're going to announce part of this expansion tomorrow for its manufacturing to support its growth. So really new product revenue, driving investment in the capital base, manufacturing jobs, and our manufacturing presence here in central Indiana.
And important, I think, for people in Indiana, and Lilly's such an iconic name, an important company for our state's economy, that it's about current demand, but also looking forward about the pipeline.
That's right. So these investments are for products just launched, but remembering we have potentially 13 more out of the 20. 7 are out the door, 13 more to go. And when our products do well in the market, we need to make them. We make many of them here in Indianapolis, and that could drive further investment for us.
All right, let's talk about $850 million in U.S. project. That includes an as you mentioned, $85 million expansion of your Trulicity device manufacturing here in Indianapolis.
Correct. So we're building on an already existing base where we make Trulicity here in the U.S., in Indianapolis, but we want to expand that because we're seeing such good demand. Additionally, we're going to dedicate a building, which we announced a few years ago, to expand production of insulin, another diabetes product for us, and that was a $140 million investment. All told this year, $850 million. That's up about $100 million from last year in capital investment. Some of that's going to research as well.
Right, and you mentioned the diabetes investment and the importance and the focus. It's kind of in Lilly's DNA, diabetes, and that's a big. You've invested more than $1 billion over the last several years. That's going to continue diabetes to be a real focus for the company.
It certainly is. It's really the backbone of our growth story right now. We've been in the business almost, it will be approaching 100 years here soon, and we've gone through various iterations of products. We're in a new sort of era for diabetes, of course, with many new products launching, Lilly taking really a leadership position and growing in that market. And it's exciting for all the folks who work in Lilly Diabetes, but also for patients, because this is a disease that's growing and we need new medicines for.
With this big investment, will there be an impact on jobs?
Yeah, so we're up about 1,000 manufacturing jobs in the U.S. over the last several years, about 400 of those here in Indianapolis. This new manufacturing investment, we're not giving a specific number to, but as we add capital investment and scope to the mission of the Indianapolis site, of course that's good for employment in advanced manufacturing, Gary, which is not just basic manufacturing jobs, but these require skilled workers.
Yep. As you look at, and you made a point in the announcement to talk about tax reform and the potential that tax reform has to potentially additional investment by the company. What could you do if what you deem as good tax reform would come along the pike?
Yeah, so this is driven by our growth, but of course we have a choice to put plant and equipment, build scale here at home in Indiana or in other places. We like to put things where we can access a skilled labor pool, like here in Indianapolis, but there are skilled laborers elsewhere as well. Tax policy makes a big difference at the end of the business case in terms of what rate you apply to the earnings you make. And today, U.S. has a pretty antiquated tax system for corporations put in place in the 80s. It taxes your earnings globally. That's out of step with the rest of the countries on the planet. And the tax rate is one of the highest in the world, if not the highest, at 35%. So we're advocating to Congress and our authorities in Washington to bring down that tax rate, tax us on our U.S. earnings, and that could really, I think, unleash even more investment for us here in Indiana.
The final question for you, how confident are you that reform is on the way? I know you and other pharma CEOs met with President Trump at the White House several weeks ago, and there was talk of regulatory reform, bringing more manufacturing back to the U.S. tax reform. How do you feel about all that?
Well, I think there's good alignment on the broad themes. Of course, the devil is in the details, and Washington's a tricky place to get business done. So I'm personally optimistic. Lilly's signed on to this Made in America coalition, supporting Speaker Ryan's plan to give voice to that, because we think it could make a big difference for manufacturing jobs in Indiana. But you know, it's difficult to move things forward. So we'll be actively supporting that. I think they're talking about tax reform coming up in Congress after the summer break.
All right, we'll be following that as well as the Lilly story, $850 million in U.S. investment. Dave Ricks, as always, thanks for joining us.
Thanks for having me.
All right. Well, thanks for watching Inside Indiana Business on YouTube. For the latest statewide business news, be sure to visit InsideIndianaBusiness.com and subscribe to our free daily e-newsletters by clicking on the link.